Good morning, YouTubers. T-Square here with T-Square Talk. Hope everybody's having a great day. Got an awesome video planned out for you guys today. Today, I had received a comment that talked a little bit about what happened in 1929 and how leverage was actually the key to bringing down the whole stock market in 1929 that ultimately rushed in the Great Depression. And I think it's important that we talk a little bit about this because history may not always exactly repeat itself, but it definitely does rhyme. And we see similar patterns, similar stuff happening today, not as much on stocks, but definitely on cryptocurrencies. Now, I kind of want to talk a little bit about this because a lot of people feel like they missed out on the whole crypto movement. And because of that, people feeling bad, I thought it would be interesting to talk a little bit about, because some people don't even know that you can margin or leverage trade $1 for every 1,000 when you think about it. So you could have $1 and you can gamble essentially $1,000 on crypto. If people are able to do that, obviously it does end up making it look like more and more crypto is being bought up because they're buying it on leverage, which technically raises the prices for other people. And, you know, here's the thing. As more and more people do this, then you start to see a bigger trend of the price working its way up. However, it doesn't take much to see assets pretty much get sold off instantly if all of a sudden the exchange or the company that's allowing you to leverage sees losses that could exceed their initial input. A lot of people have this belief that cryptos can't really take a huge hit because ultimately you got time on your hands. However, if you are forced to sell your position, a forced sell, and we're going to talk about that because there was even times in 2009 where there were people that were forced to sell their gold positions. And a lot of people don't know that in some cases there was examples of people that were leveraging their gold, leveraging their silver, and all of a sudden we see this huge market crash on precious metals, and the people that were leveraged might have gotten a letter in the mail today saying, hey, send us some capital or we're going to liquidate your trades, your positions. And then in the same day, the next envelope that they open right behind it said, we regret to inform you we've liquidated your position to prevent losses. Because who's really losing? If someone loans you, we'll just say a 10-to-1 ratio, and all of a sudden 10%, you see a 10% drop, then ultimately you've been wiped out. You've lost everything. And so I think it's important that we talk about that. So that's what we're going to talk about in today's video. I really hope y'all enjoy the video because it's, you know, I don't pick on cryptos all the time, but today I'm kind of going to pick on it a little bit. I hate to say that, but hey, I'm open and honest. I give you guys my opinions. Not everybody's going to agree with every opinion on every item that I have. I'm thankful, though, that you guys do watch the video and you check them out. You subscribe to the channel. I can't thank you enough for that. You guys are like my family. And so that's what we're going to talk about. If you enjoyed the video, hit that thumbs up, leave a comment, and hit that subscribe button. So with that being said, let's check out what the markets are showing right now. So we actually seen silver go up nicely today, even though in overnight trading we're seeing a pullback right now. We're seeing the price dip down a little bit, 38.39. However, we were as high as 38.75. It looks to me like we're seeing a nice consolidation. We're seeing a nice buildup as gold and silver are starting to inch their way up again. But a lot of people don't talk about it. Because they don't want you knowing what happened. We were quick to see, oh, the price of precious metals got plunged, beat up due to whatever the reason that they're talking about, whether it's some great find in the middle of nowhere, whether it's some, oh, we're going to start mining crypto. I'm sorry, mining. No, someone's going to tease me. You got crypto on your mind. We're mining gold and silver on asteroids at someday. A lot of people have these beliefs, and maybe someday that will happen, but they're not going to go mine gold at $3,400 an ounce. They're not going to mine silver at $38 an ounce. the price is going to have to go a whole lot higher. And I believe that day is coming on that. So we've seen a little bit of a dip after we've seen that climb. That's okay. We're still at 38.50. We're higher than we were yesterday when we made the video. And I think ultimately it's going to go a lot higher. We got gold trading at 33.56, up very little bit. We've seen that again climb up a little bit and then all of a sudden kind of fizzle back down in overnight trading. I'm really excited to see how the week plays out at the end. See if we're going to close at a higher weekly high. We'll see how that plays out. The chart's kind of slow to come up. You can kind of see a lot of sideways moving. We've seen the jump up. Now we've seen the beat down. We were actually at 33.75 for a little while, and then it came back down. But here's the thing. Like I say, we're only $144 roughly from the high. So it's within reach. Got to mention Bitcoin because Bitcoin is pretty much what everybody is talking about right now. I talk to a lot of my friends. A lot of them will tell me, hey, I'm still holding my Bitcoin. I'm wondering if I should sell. Who knows? We'll see what happens. I find it interesting with the margin requirements that they allow on cryptocurrencies. And that really is what sparked me to do today's video because I didn't know we allowed this much margining. 1,000x? I mean, think about that. That means $1, essentially, you have $1,000 to work with for every dollar. So, I mean, it doesn't take a huge amount to really be able to buy up some good Bitcoin. Now, that's great when the price is going up like it is right now. But when this starts to come down, and at some point we could see a sell-off, it kind of tends to snowball because forced sell-offs happen. People are forced to liquidate their position. We're going to get to that here in just a minute. Taking a quick look at the DXY. We got the DXY trading at 97.77, down since yesterday as we are starting to see it kind of get pulled down a little bit. Not the end of the world. We were lower. We were down to 96 about a month ago. So we'll see which way we go from here. We got as high as 100 briefly just when the Fed meeting was happening a little while back. All eyes pretty much are on the next Fed meeting. What's going to happen? We still got a little bit of a wait for that. However, clearly they are continuing to go in debt as we are now at $37.25 trillion. So let's jump in and let's talk a little bit about leveraging to hear what you guys think of it. So some people don't know what leveraging is. So I wanted to get you the official answer, even though I know what it is. We've done videos on leverage before for leverage trading on crypto, leverage trading on stocks, leverage trading on commodities. You can pretty much leverage almost anything. And leverage just means it gives you, in short, the ability to put up some amount of capital. We're going to use $100 for easy math. If you get a 2-to-1 leverage, that means you have $200 to play with. If you get a 5-to-1 ratio, you basically put up 100 and you get $500 to trade. Now, right here, you can start to see the problems. The higher the number is, at some point, they could liquidate your position when they realize, hey, we're going to lose out. Now, I don't think they'll do it right off the bat. However, if it works in their advantage, if it's in your contract, they can leverage if they feel that they are going to take too big of a hit. Because essentially, when you're leverage trading, you're using their money to amplify your gains or losses. Now, obviously, if you're gaining, if whatever you bought, we'll say you put up $100 and they gave you a, we'll say 10-to-1 ratio. 10-to-1 is not unheard of when it comes to cryptocurrencies. In fact, a 10x is extremely low. That means you would have $1,000 to play with, to invest in whatever you want. Now, here's the thing. If that crypto that you bought for $1,000 drops by 10%, you've just lost 10% of $1,000, which is $100. At that point, the company has the right to sell off your position totally and essentially take their $900 back, and you're left holding the bag. Now, in a lot of cases, they will contact you. They will try to contact you, say, hey, you have 24 hours to put more money in. If you don't put more money in, we're going to liquidate your position. That doesn't always happen, though. Sometimes that happens. You have time to do that. But when the price is falling too fast, that's it. There's no going back. And I have a belief eventually they will destroy the crypto markets the way they destroyed the stock markets in 1929. Now, there's always going to be people out there that say, well, they didn't technically destroy the stock market, because if you had held your stock, it's worth a whole lot more today. And they would be absolutely right. I mean, if you bought, I don't know what the hot stocks were in 1929. I never really looked it up, but let's just say for a minute it was Coca-Cola. Well, it's safe to bet that if you bought Coca-Cola shares and you wrote it down, 20 years later, it was back on the climb again. Today, it would be a whole lot higher. However, just losing access, though, to your money is not good, because that essentially you lose opportunity. I mean, nobody wants to invest something, and yeah, it's nice to know in 50 years it will be worth more, but what happens if for the first 25 years you can't sell it? You're stuck holding it, and essentially you're having a hard time making ends meet. There was a lot of situations where people lost everything they owned during the whole Great Depression collapse. Excuse me. So that's the deal. When a margin call comes in, they liquidate if you can't provide the capital in time. So now that you know a little bit what margin is or leverage trading is, it goes by different names. You can call it margin trading, you can call it leverage trading. Margin trading was more the proper term on the stock market. However, a lot of people call it just leverage trading now, because you're leveraging your money to get a lot more money to essentially gamble on different stuff. Now, here's the thing. If you're buying crypto and you're not leveraging it, hey, that's great. I mean, if the price goes down, you still own the crypto. Just like we say in the silver markets or the silver forums, if you don't sell your ounces, you still hold your ounces. Does it really matter what the price is? If the spot price says 38, great. If it says 28, okay, it's no big deal. You didn't lose anything. Your silver is just worth less. How long can it stay down? Now, that's where stuff can get interesting. So let's take a look real quick and ask a question for when margining stock. How many times multiple can you margin? So when margining stock, the most I personally have seen was a 4-to-1. Now, some of y'all may have seen more. A 4-to-1. A lot of these regulations are put in place because they don't want the stock market to outright collapse. And they understand that if the stock market starts dropping too much, if it drops 25% in one day and you're at a 4-to-1 margin, you've just been wiped out. And those sales of them selling all that margin stock that you had essentially will push it even lower. That's why they have breakers in place to prevent huge amounts of drops. Now, I don't know if they have breakers in place for cryptocurrencies. I really don't believe they do, but I could be wrong. If someone out here is a big crypto trader, go ahead and put a comment in. Do they have breakers that slow the drop down, essentially? Because if they shut the stock market down, even for 30 minutes, that can kind of slow the fall. It can give people time to contact their broker and say, hey, I'm going to transfer funds. Do not liquidate my position at a loss. In fact, I want to buy more. And a lot of people will try to buy these dips. And that slowdown or that shut off gives the opportunity for people to pour more money into it that believe, hey, it can't keep going down forever, and essentially gamble even more. And in a lot of cases, this has slowed the fall and even turned the fall around. But when you're looking at cryptocurrencies, so this is where it can get really interesting. Some cryptocurrency exchanges allow you to leverage your trades 1,000 to 1. Think about that, 1,000 to 1. I got to actually show you guys an example so you can actually really see the math behind it. If you deposit $100 into your trading account with 1,000x leverage to your position, it is now worth $100,000, which means essentially you could buy today a Bitcoin for approximately $125, maybe roughly $123, because that would be if it's 1,000 to 1 leverage. So it gives people the opportunity to really capitalize and buy even more crypto. And unfortunately, we live in a gambling society. Society tends to gamble. And I believe eventually, if you gamble long enough, you will get destroyed. Now, here's the thing. With that being said, do I like to gamble? A lot of you know I do like to gamble. I've always been a little bit of a gambler. I've even done where groups of us would get 10 people watching the channel on a regular basis. We'd buy a book of lottery tickets. We'd scratch them off during the live stream. We never really won anything, ever. We did that probably 20 times maybe. And our best book, we came up down $6 where each person had to basically send in 60 cents. A small amount. However, some people liked it, some people didn't. I was one of the ones that didn't after a while. I said, and the attitude I got from one person, I remember, he's like, so what? We only lost $6. That's pretty good. That's not good. I want to make money. I don't want to throw my money away. If the best book that we ever bought was we lost 60 cents each, and the worst book was we each lost $25, I mean, that essentially adds up over time. Now, do I buy lottery tickets? Yes, I do. In fact, I got a short that's already recorded. I haven't posted it where I hit a $500 winner on one. But I knew it was coming based on what had already came out of the book. I knew it was potentially that ticket or the last ticket because enough had sold. Nobody had hit anything at all. So we knew it was coming. And when I scratched it off, it was just obvious that it was there. So, but there is no guarantees when gambling, really. So that's what people have to understand. Now, 1,000 to 1 leverage. Think about the ability that gives people to buy into crypto. Everybody wants to be a part of the next big thing. They tend to want to follow the train. They don't want to be on the train. They would love to be. I shouldn't say they don't want to. They would love to be on the train when it leaves the station. But generally, people are chasing these things. They miss the big gains, and then they kind of follow it thinking, oh, it's just going to keep going up indefinitely. And I know there are going to be some people out there that are anti-gold and silver, and they will tell you, well, you're chasing the train on gold and silver. And I really don't believe that's the case because we're not even near the all-time high on silver yet. Silver is, I won't say half the all-time high, but sitting at $38, almost 39 with an all-time high of 50. Once we break that 50, I think people will see something happen that will blow their minds. And we'll see literally huge moves in the price of precious metals. And here's the thing. There are a lot of people out there that are leveraging against silver. That's why you see so many paper contracts. Let's see if I can pull something up real quick for you guys to see. U.S. debt clock. So let's pull up this. This is the U.S. debt clock. This really gives you oh, you know what? I already had it up, didn't I? I did have it up. Darn it. What was I doing? Opening it up again. I just didn't even think about it. Let's take a look down here. So in the lower right-hand corner, you'll see a lot of stuff that deals with silver, gold, precious metals, and paper to physical ounces. And the reason this is important is when you look at paper to physical ounce of silver ratios, you have the silver trading at 362 paper contracts for every 1 ounce of physical silver. That means 362 people think that they own a piece of silver, an ounce, but only 361, well, I shouldn't say only one of them is going to get the ounce. 361 people are going to be told, I'm sorry, we don't have your silver. We'll just give you the money. Now, here's the thing. Will it matter right off? No. Price solves everything. If silver is trading at almost $40 and everybody starts laying claim to their silver, well, the price will go up, I believe. The price will go up. People will either want the money or they'll want the silver. If they complain enough, someone's got to give. and there's not enough silver, so guaranteed people will give. If the price goes up to 50, there might be a lot of those people that have the paper, and they'll say, you know what, I'll take $50 in cash and give up my silver. But they all won't, especially when they realize what's really happening to the fiat currencies of the world. The dollar looks like it's doing a decent job holding up, but when you understand all fiat currencies are falling, it doesn't matter how. We've talked about this with if 5 of us or a bunch of us jump out of a plane. Well, if we jump out of a plane, what happens? We're all falling towards the ground. If we don't have parachutes, that's it. But let's say a couple of us are kind of gliding. We're not falling. We're kind of slow falling. Or we jump out of the plane a little later. But we're slow falling. Are we in any better of a position than the people that are just plunging? Eventually, we're all going to hit the ground. And that's kind of what's happening with fiat currencies. They're all falling. It doesn't matter really which currency hits first. It just means that, yeah, they're gonna feel the hit before we do. But at the end of the day, we're all falling. And once you understand that, you understand, well, how can I position myself against it? You know, in a world where everybody is using margining or leverage trading, they think that they're protecting themselves with crypto. But are they really if they're margin some crazy amount? It doesn't take much for things to really start falling and then it compounding and snowballing. Someone left me a comment yesterday. It said your financial assets are starting to snowball. And that's absolutely right. I mean, if you have precious metals, you're seeing the value of your investments. I shouldn't just say precious metals because you're seeing it in crypto right now too. You're seeing it snowball. It's growing faster than the people that are just holding dollars. People that are just holding dollars aren't really seeing any huge growth in their investments. What they're seeing is, oh, hey, I got dollars in the bank. I had 50,000. I still got 50,000. Maybe I've got 51,000, a 2%, but the inflation has eaten away at that. It's not buying you quite as much. I actually had read something interesting in an article the other day. It said your money will never be worth more than it is today. The moment you get your money, it has the highest value in the time that you will hold it. The sooner you can spend it on a hard asset, the better off you are because that money is losing value. Now, if you invested in something, maybe it won't lose value quite as quick, but you have the asset now, like if you buy gold or silver, or I'm even going to say Bitcoin for a minute, you're buying something. If that something is growing, well, you're doing okay, especially if it's beating out the inflation rate. However, most people are just holding their money in a bank account. Bank accounts are designed to use your money to make money off of it. And then what do they give you? Nothing. There's no incentive anymore for people to save money in a bank. There's not really even much incentive on savings accounts, checking accounts, even the treasury bonds, CDs, whatever you want to call it. In some cases, there are some CDs out there that pay pretty good interest rates. I'm not going to lie. I looked at one that was paying, I think, 5 or 6% a while back. Now, I don't know if they're still there, but most likely they're going to end up cutting the rates. If they cut the Fed rates, you're going to see all rates start to come down and go back to zero, essentially, or work their way down. Maybe not zero, but definitely work down. So I think it's important that people realize what is happening. And just because it feels right now like something is holding its ground, like crypto, it kind of makes people want to put more money into it. It makes them want to leverage more. If I put in $1,000 and I leverage it at, we'll say 500 to 1, and I'm making profits, well, darn, maybe I should have leveraged it 1,000 to 1 if they'll let me. Maybe I should put more money in, squeeze that money. Instead of buying precious metals like gold and silver or real estate, maybe I should be putting it into cryptocurrencies and then leverage it at 1,001, and then boom, it's all upside potential until something bad happens. When that something bad happens, it literally will destroy the entire crypto market and put us into essentially a crypto winter. not just a crypto storm, but a crypto winter. And I believe that, yes, gold and silver may have a pullback when that day comes. However, I kind of wonder if that will happen 100%, because if big money decides, hey, we need to get into gold and silver now before it starts to climb, you might see the fall, but you might see it fall a very short time period and then start climbing up, because big money will always get in at the right time generally. The everyday people like me and you, we usually lose out. But I think you're going to be a winner if you've already started buying precious metals. I think you're creating an opportunity for yourself down the road to be okay. Now, if you're leveraging your precious metals, be very careful. It doesn't take much to see some sort of a pullback, and then it compound from there. So with that being said, I'm going to wrap up today's video. I really hope you enjoyed today's video. If you did enjoy today's video, please take a quick minute, hit that thumbs up button, leave me a comment. I'm hoping to be going live this weekend for our membership event. If you're not sure if you're a member or not, if you have a star next to your name, you are a member. If the star is there, you're pretty much on the list. I have seen the star go away and a name stay on the list for a couple days because they'll say they canceled their membership. But I want people to know I will be doing these 2 membership events here shortly. One of them will probably be this weekend. The other one will probably be next weekend. And it's going to be a lot of fun. There is a couple people that I still have their prize. I've been meaning to get it out to them. I've just been so busy. I've actually got 7 package openings that I got to get done on top of everything else going on. It's kind of difficult. I wanted to stop the channel for like a month while I'm remodeling that other house. But I do expect that I will get those out very shortly. I'm hoping to have them out before the weekend, to be honest. So we'll see what happens on that note. There's only a couple of you that applies to. 2 of you I expect to be seeing pretty soon, really. Some people I do see that are members. If I fly somewhere or I head out somewhere because I have family around the country, I will talk to them and be like, hey, how you feel about me just dropping it off to you in person if I'm going to be within an hour or 2 from your place. So 2 of those people I have already talked to, and they said, just hold it. I'd rather see you in person, stop by and drop it off. And then the other 2, one of them had a change of address and asked if I'd hold out. And then the other one has been patiently waiting, so I do want to get it to him. We had some issues with his mailing address where I lost it in the email and so on and so on. And if he's watching this, he knows who he is. With that being said, I thank you for watching, commenting. Hit the thumbs up button. Leave me a comment. Let me know your thoughts. With the amount of leverage that is in the world today, I think we are asking for trouble. And when it happens, it's going to happen fast. And it's going to wipe out a lot of people. And that will be it. So thank you all. Have a great one. And I'll see you guys again tomorrow on T-Square Talk. Take care, everybody. Have a great one. Bye-bye.